Welcome back once again to the Forex and Crypto Trading Masterclass. If you're new here, do make sure to subscribe and turn on the notifications so you don't miss any part of this series. We're going to continue our basic Forex and Crypto education section. We've already covered asset classes and types, and exchanges, brokers, and prop firms. Today, we're diving into types of analysis. This is one of the most important topics in the entire course. After this, we'll wrap up with types of traders and investors. Let's dive in. In this video, I'm going to break down the three main types of market analysis that traders use. We'll start with technical analysis, which is our primary focus in this course. Then we'll talk about fundamental analysis and how economic data drives the market. Finally, we'll discuss sentiment analysis and how psychology plays a role. And by the end of this section, you'll understand which type of analysis you should use and when. Before we break down the different types, let's understand what market analysis actually is. Market analysis is simply the process of evaluating the market to make informed trading decisions. It helps you understand three critical things: why price moves, when to enter and exit your trades, and which direction the market is likely to go. Every successful trader, and I mean every single one, uses at least one form of analysis. Some use all three. The key is knowing which one works best for your trading style and goals. There are three main types of analysis. 1. Technical analysis. This is all about reading charts and price action. 2. Fundamental analysis. This focuses on economic data and news events. And 3. Sentimental analysis. This looks at market psychology and trader positioning. Each type has its strengths and weaknesses, and each serves a different purpose. Let's break them down one by one. Let's start with technical analysis. This is the study of price charts, patterns, and indicators. It's based entirely on historical price movements. The tools you use include the candlesticks, trend lines, support and resistance levels, chart patterns, and technical indicators. The core belief behind technical analysis is simply price reflects everything. In other words, all the information you need, whether it's economic data, news, or market sentiment, is already baked into the price on the chart. You don't need to look anywhere else. Technical analysis works on any time frame, whether you're scalping on a 1-minute chart or swing trading on a daily chart. The same principle applies. So why do we focus heavily on technical analysis in this course? For several reasons. First, it works on any market, be it Forex, crypto, stocks, commodities. It doesn't matter. Secondly, it works on any time frame, from the 1-minute charts all the way to the monthly charts. Third, you don't need to follow the news. Everything you need is already on the price. Fourth, it's beginner friendly. Technical analysis is easier to learn and apply compared to fundamental or sentiment analysis, which requires more experience and knowledge of economics. This course is about 80% technical analysis because it's the foundation of everything. Once you master this, you can layer in the other types of analysis for even better results. Now let's talk about fundamental analysis. This type of analysis is all about studying economic data, news, and events that impact the markets. The key factors include interest rates, GDP, CPI, which is inflation and unemployment numbers, political events and government policies also play a major role. In crypto, fundamentals include things like regulations, adoption rates, and major network upgrades. The core belief behind fundamental analysis is that economic factors are what drive price movements. If the economy is strong, the currency strengthens. If the inflation is rising, central bank raises interest rates, and that impacts forex pairs. So, when should you use fundamental analysis? It's best for long-term trading, position trading, or investing, where you're holding trades for weeks, months, or even years. It's also useful for news trading, where you're specifically trading around major economic releases like NFP, CPI, or central bank announcements. Fundamental analysis helps you understand the why behind big moves. For example, if the US dollar suddenly strengthens, fundamentals will tell you it's because the Federal Reserve raised interest rates or released strong economic data. But what is the limitation? It is hard to time exact entries and exits with fundamentals alone. You might know that the dollar will strengthen long term, but you won't know exactly when or at what price. That is why combining it with technical analysis is so powerful. The third type is sentiment analysis. This is all about reading market psychology and understanding traders where they are positioned. The tools you use include CHoCH reports, that's the commitment of traders report, which show how institutional traders are positioned. You can also look at social media trends, especially in crypto where Twitter and Reddit can move prices. The Fear Greed Index is also another popular tool, and some brokers publish positioning data showing what percentage of their clients are long or short. The belief behind sentiment analysis is simple. The crowd is usually at the wrong end of the extreme. When everyone is bullish and overly confident, that's often when the market reverses to the downside. When everyone is fearful and bearish, that's often when the market bottoms and rallies. So how does sentiment analysis help you? It helps you identify overbought or oversold extremes. When sentiment reaches an extreme, it often signals a potential reversal. It's especially useful for contrarian trading, where you're betting against the crowd. For example, if 90% of retail traders are buying Bitcoin and everyone is screaming that it's going to the moon, that's often a warning sign that a correction is coming. The smart money, the institutions, are usually on the opposite side of the retail crowd. Sentiment analysis is best used as confirmation alongside technical analysis. It's not something you trade on alone, but it's incredibly valuable for context. So, which type of analysis should you use? If you're a beginner, start with technical analysis. Master candlesticks, market structure, and key levels first. This is your foundation. If you're an intermediate trader, start adding fundamental analysis for context. Check the economic calendar, understand what drives the currencies or cryptos you're trading, and avoid trading major news if you're not comfortable with volatility. If you're advanced, combine all three for confluence. Use fundamentals to understand the bigger picture. Use technicals to time your entries and exits, and use sentiment to confirm your bias. In this course, we'll focus more on technical analysis and less on fundamentals and sentiment. Technical analysis is the sweet spot for most traders. Most traders often ask themselves, can I combine these different types of analysis? The answer is absolutely yes. In fact, the best traders in the world use multiple forms of analysis. Here is an example workflow you can follow. Step 1. Use fundamental analysis. Check the economic calendar for any major news events in this week. If there is a Federal Reserve announcement or NFP release, you know volatility is coming. Step 2. Use technical analysis. Identify your key levels, support, resistance, liquidity zones, order blocks, and plan your entries and exits based on price action. Step 3. Use sentiment analysis. Check positioning data. Are most traders bullish or bearish? If there's extreme positioning, it might confirm your reversal setup. When all three types of analysis point in the same direction, that's called confluence, and it gives you a much higher probability trade. This is what separates consistently profitable traders from the rest. Before we wrap up, let me highlight some common mistakes traders make with analysis. Mistake number 1. Relying on only one type of analysis. If you only use technicals and ignore a major news event, you can get wiped out. If you only use fundamentals, you struggle to time your trades. Mistake number 2. Ignoring fundamentals completely, especially during major news releases. Even the best technical setups can fail when a central bank makes an unexpected decision. Mistake number 3. Overcomplicating your analysis with too many indicators. More indicators doesn't mean better results. In fact, it often leads to analysis paralysis. The best approach: start simple, master technical analysis first. Once you're consistently profitable with that, then add layers of fundamental and sentiment analysis. Don't try to do everything at once. Alright guys, here is your assignment for this video. If you're serious about becoming a Forex trader, then you should learn how to do your own research as well as becoming uncomfortable. I want you to pick 3 major economic events happening this week, and you can find these on an economic calendar like Forex Factory or investing.com. You can Google them. Once you've picked your 3 major events, observe how the markets react before the news, during the news, and after the news. Does the price respect technical levels? The sentiment shifts dramatically. Make sure to document your findings. Take screenshots, write notes, and start connecting the dots between fundamentals, technicals, and sentiment. This exercise will train your eyes to see how all 3 types of analysis work together in real time. It is one of the most valuable assignments in this entire course. Please promise me you're not going to skip it. Anyways, alright guys, thank you for sticking with me to the very end of this video. You've done excellent work, and I'm sure you now understand the 3 main types of analysis: technical analysis, fundamental, and sentiment. You know when to use each one and how to combine them for higher probability trades. In the next video, we're going to cover types of traders and investors. You'll discover which trading style fits your personality, lifestyle, and goals. Whether you are a scalper, day trader, swing trader, or a long-term investor. If you found this video helpful, do hit that like button, subscribe if you haven't, and drop a comment below telling me which type of analysis you're most excited to learn. I read every single comment and I'll personally respond. See you in the next video. Keep learning, keep growing, and let's continue building your trading future together. Thank you. See you in the next one.